morning, traders. Welcome to the Elliott Wave Street Weekly Report. I'm Juan Maldonado, and it's a pleasure to share with you some of our trading plans. This week, we are going to check the euro and then the S&P. This is the euro. On the euro, seems that we are finding here the top of B, getting ready for the leg down. The plan on the daily chart is to get to the previous low to complete the pattern. So I'm looking for another leg down. Here on lower time frames, we're starting to see the development of wave 1. Some of the questions that I receive daily from clients and traders is about how to find out if an impulse is an impulse or if it's a corrective leg in the Elliott wave theory. So when we are having the impulse, a common mistake, let's say a bear impulse, a common mistake is that you have a 5-wave sequence and you get excited and you say, okay, I'm going to look for wave 2 and I'm going to sell it. So the big problem that I have been seeing is that traders don't read the corrective wave properly, and because they have a 5-wave sequence before, they do crazy things finding wave 2. If this is wave 1 and this is wave 2, I have been seeing traders doing a lot of crazy stuff trying to find the end of 2. But reading 2 is important, and today we're going to talk about tools to confirm those patterns, to confirm those corrective waves, and to confirm that actually we are seeing the right right impulse, the right pattern. So the first way to confirm that we're in a corrective is that the move up should be pretty slow. You don't want to have a fast move. So fast move could be this big candle, for example. A big candle is a fast move, and if you're thinking that that's a corrective wave, let's say that that's a wave 2 and the price is going down, you are not going to sell that type of price action. So here in the euro, where we are looking in terms of a slow move for wave 2, should be something like this, right? And if price rejects, we are going to have the entry right here. The other way that we can use the data to confirm what we are seeing is by applying the MACD. For entries, the indicators are terrible. The signals on the indicators are extremely late. But for reading momentum, I believe they are really good, because it's the same price, just that presented in a different way, that you can easily read the momentum. So these are momentum indicators. In the Elliott Wave Street membership, we have a complete course about trading and analyzing the market and using the MACD to validate the waves. So listen, look at the slope. The MACD line is the blue line. Look at the slope crossing the 0 line of the MACD. Pretty strong, right? Pretty aggressive. Let's have a look at this cross here to the downside. Is the same? Is the same slope? Of course not, right? So look, the slope of the MACD line here is telling that the price action, whatever it is here, is corrective, right? Or here is corrective, and here is telling that this cycle is showing that whatever is in the chart is an impulsive leg. So look, fast is low, right? So that's telling that when the MACD is moving down is fast, when it's moving up is slow. So that's a reading of impulse corrective when you are dealing with waves. So the next step, because right now the MACD is moving up, the price is moving down, so it's losing momentum. It's not a trade signal at all. When you find trade signals in the indicator, you are going to lose a lot of money. But what if price starts the wave 2 We need to see small candles. We need to see price losing momentum. We need to see a price having a trouble to move higher, right? We need to see supply coming into the market during wave 2. We need a price action signal. I think that triggering with price action is key, and that's the sell trade, let's say. And that will be fine in the end of 2 to capture wave 3. Well, what if, on the other hand, we have an aggressive price action, huge candles coming up here? Well, just with that one is enough. So this is my point. Imagine someone trying to sell here because it's the wave 2, and the candle is huge, and the MACD is like this. Come on, it's not a corrective. Price is gonna cross the previous high. So impulse plus corrective, not impulse plus impulse. Impulse plus impulse is gonna reach a previous high. So there are ways to read the market and have a higher probability. But you can filter out a lot of bad trades that clearly are not going to provide you value or a chance to make money. This is the S&P. On the S&P, I'm still with big concerns regarding if this is the bottom or not. I think it will be great if we can have another leg down to take out this liquidity from this area, reject, and from there we will have a high probability bottom of the market. But on the other hand, last Friday we got an impressive move up on the S&P. Last Friday we have this strong leg up on the S&P. So that's telling that we have buyers at higher prices, and that's telling that a lot of bullish activity is happening there. So last week in the membership, we sell it here. We plan a sell trade on this area, which worked nicely near 100 points to the downside. Last Friday, I was looking for a continuation here, and clearly didn't happen. And the price instead started to build big green candles. Question, are you trying to sell after that candle? Of course not, right? Doesn't have any sense. The next one, of course not, right? And the price makes the high. You see the difference between corrective and impulsive using price action? So price makes the high. Now, the bias for the session today, I'm looking for a high. I'm looking for this B and C. And you may be wondering, oh, you have a mistake there because you have ABCs for wave 1, ABC for wave 3, ABC for wave 5. That's an invalidation, come on, right? So actually not. The Elliott wave theory has a pattern that is called the diagonal wave. The diagonal wave is when wave 4 moves inside wave 1 and you are in wave 1 or A, in this particular case as a leading diagonal, and the Elliott wave theory allows you to pick between ABC for each leg or 1, 2, 3, 4, 5. So it's up to you if you want to use one wave count or the other, but at the end, it's going to be the same. So I have some concerns, if this is true or not of a real impulse. But don't forget that the impulse, if we have a 5-wave sequence, diagonal, whatever, the validation comes during the corrective. So if we have a strong sell-off here after the 5, let's say that we start seeing these candles, we are going to reach the previous low. Of course, for day trading, for scalping, this is not a big deal. But for swing and position trading is a big deal. So the plan, anyway, is to sell the S&P once it completes the pattern. I think we need to have a couple of new highs. Probably we can test the 4,000 area this week. And look on the 4-hour chart, if we sell here, right after 1, with a proper price action signal and everything, if we went short, the price builds a 3-wave sequence, we are going long. After that, we close any short. On the other hand, if we have a big sell-off here, big candles moving down, we are not going to go long. We are going to keep short trade. We are going to get ready for impact at the previous low, and at the rejection, we are going long. So that's the strategy. You can see we can get ready for both the scenarios. So again, day trading and scalping today, bullish. Then swing trading, medium-term trading, short, then depending on how the market builds the corrective, we will define if we are going long after that or if we wait for the lower low to have the next entry. All right, traders, that's the plan for this week. If you want to get our analysis every day, we have this fantastic membership. In November, we're having the third class of the MACD. We have everything recorded in the website. So in elliottwavestreet.com/membership, you are going to have the Forex, the stocks, or the full access package. Here, you will see the instruments that we cover on a daily basis. You are getting the report, you are getting the trading plans, you are getting the video, and you're getting the education. We have a fantastic school inside with the Elliott Wave crash course, with volume profile course, with candlestick course, with MACD course, that is the momentum course. And every month I'm doing new lessons that, of course, we keep recorded there in the education area. So you can sign up right away. You will get your immediate access to this fantastic analysis. I'll see you the other side. Have a fantastic start of your week and your month. I'll see you soon. Take care. Bye-bye.